Good morning and welcome to the B.F. Anderson Technical Report for August the 4th. I thought I would share with y'all something that I witnessed over the weekend, last weekend, when I attend a webinar given by Chris and Kathy Chivacco of Atlanta, Georgia. And I thank them for this graph. This is really an interesting graph. I don't want to spend too much time on it, but at the same time, I think it's important to understand the value line geometric index. Now, this is a unique index, meaning that they do a geometric average of 1,700 stocks that make up the index. Now, this is a dynamic index where the 1,700 are rotating, and Value Line has always prided itself on trying to have the top 1,700 companies in their index. Well, the first thing to observe about the index is that it is a substantial index, 1,700 stocks. That's quite a broad index. But also, when you look at the fact that it is not market cap weighted, in other words, the Dow Jones Industrial Average or the S&P 500 or just about every index out there is market cap weighted, which means that the larger companies get more emphasis in the index. So if you take the Value Line Geometric Index, you start to understand this is trying to see what the average stock has been doing. It's a good way to study median and average stock prices. Now, what's interesting about this graph, and I'm going to go on to another graph here shortly that shows it a little bit more clearly. The Value Line Geometric Index has been locked in a trading range since 1982 till this year. So in other words, if you look at this graph, you quickly realize this is a 35-year price box. So in other words, if you bought this index, and we hear a lot about people buying index funds, this index has virtually gone nowhere for 35 years. So it's somewhat of a generational index, whereas if you go and study and look at the bear market in 2009, if you'll note there, the price on the index got all the way back down to where it was in 1990 and 1984 in 2009. So basically, you've had rallies or mini bull markets up until 98, and then you had a recovery 2002, and then you've had a recovery in 2009. But is it important that this index, for the first time in 35 years, is breaking out to all-time new highs? Now, if you read the quote at the top here, it says, typically the more times price bounces back and forth between the range, the more powerful the move may be once the price breaks through. This is considered true for touches along uptrend lines and downtrend lines. The more times price touches the same trend line, the greater the potential move once it breaks through. So as you can see here, we hit the top of the box in 98, we hit the top of the box in 2007, and then we hit the box in the top of 2014. Now, I have an old friend of mine who has since passed away. He was an engineer named Sam Roberts, and Sam used to say that he thought things were mathematically important or statistically important in threes. So you've got three tests of that upper box, and for the first time, we are breaking through. So is this meaningful? What does this mean? So if you go back and you look at history and you try to determine who, historically, where has this happened before? What would be the most similar period? And I would have to say the most similar period was 1929 to 1954. So when we broke the top of the box in 1954, the United States went through a tremendous period of prosperity between 1954 and around 1974. So it was about a 20-year improvement in the economy during that time period. Now, we had a bad recession in 74. So the one correlation, economic correlation that you could make here is that in 1954, it was really the development of the middle class in the United States, and a lot of things were going up in a big way. So what is this telling us? So if we go to this graph here, which is The same graph. This is the Value Line Geometric Index, and I just want to clearly show that it has broken out and making an all-time new high for the first time in 35 years. So let's think about the possibilities here. You kind of have to use your imagination. Is the United States of America going into a period of prosperity? Is this what the market is telling us? Or is it China, or is it emerging markets? You have to be open-minded here. We all know about the bad times that took place all during this period here. There was bad economic conditions, but all of a sudden something here has changed. So let's kind of look at the top 10 here and just see what's going on in the top 10. First, China Lodging. Again, we're starting to see Chinese stocks start to make our list. This is basically the Holiday Inn of China. The middle class in China is expected to double in the next 3 years. So like 1954, are we looking at a Chinese situation? Second stock is JD.com. This is a Amazon, eBay type of company in China. Again, this is making the list. Now, a new name that's unusual is NRG Energy. Now, this is a conventional electric utility company that's going through a major restructuring. Now, notice here there's hardly any dividend yield, and usually with utilities you get an above market dividend yield. There's a lot going on with this company. They're going to be reducing debt dramatically, and they're restructuring the company. We'll keep an eye on it. Again, one of the stocks that have consistently made our list is NVIDIA. Now, one thing about NVIDIA to realize is they're making the graphic processing unit that's going into the new Tesla automobiles, which they now are up to 500,000 pre-orders. And as of the latest earnings report, they are saying that they are getting approximately 1,850 new orders per day. So every Tesla that goes off the line is going to have an NVIDIA processor in there. And I am of the opinion that this is where Tesla, if they do start making money, this is where they're going to make money, because they're selling the software for the autonomous driving, which is $5,000 to $10,000, and the car is $35,000 to $44,000. Now here's another stock that made the watch list, Vertex Pharmaceuticals, again biotech. The main takeaway I'm taking on biotech and China is that these are riskier areas of the market. So it's almost like the market is going more to a risk-on type of environment. So take some time and think a little bit about what I'm saying here about the Value Line Geometric Index. I think we are making history here is what it boils down to. Does it mean anything? Just think about it and let me know your thoughts. Thank you.